Good morning, I'm Maiki Oreta and you're watching Business 360, where we break down the numbers, connect the dots, and give you the developments and the insights you need to navigate, adapt, and lead. Let's dive right in. Heads of government-owned and controlled corporations are ordered to resign as the Marcos administration launches a major government revamp. An expert warns that the EDSA rehabilitation could trigger economic losses worth trillions of pesos. The Securities and Exchange Commission greenlights Ayala Corporation's 20 billion peso preferred share offering. And tech billionaire Elon Musk steps down as a top advisor to U.S. President Donald Trump. Let's take a look at how global financial markets performed overnight. U.S. stocks closed lower on Wednesday as investors weighed fresh signals from the Federal Reserve and awaited earnings results from AI giant NVIDIA. According to data from LSEG, analysts expect the chipmaker's first quarter revenue to post a strong increase. Minutes from the Fed's May 6 to 7 meeting show that officials are increasingly worried about potential trade-offs ahead as both inflation and unemployment start to rise.
NVIDIA's significance to the market is still fairly large. They're no longer the largest company in the S&P 500, but they really sit at the center of artificial intelligence demand and supply at this point. And so I think that's going to have a significant impact around and on the companies around it, right? The ecosystem around it. Particularly, it will tell us a lot about how other companies are doing.
All main gauges on Wall Street were down by a little over 0.5%. The Dow Jones Industrial Average lower by 0.6%. The S&P 500 lower by 0.6% as well, and the Nasdaq lower by 0.5%. European markets also ended in the red. London's FTSE 100 shed 0.6%. Germany's DAX lower by 0.8%, and France's CAC 40 lost 0.5%. A major shakeup is underway across state-run firms. The Governance Commission for GOCCs, or GCG, is ordering all heads of government-owned and controlled corporations to resign immediately. The move follows President Ferdinand Marcos Jr.'s call to recalibrate government operations, a signal that performance, loyalty, and policy alignment are now under tighter scrutiny. GCG Chair Marius Corpus formally instructed all non-ex-official chairs, CEOs, and appointive board members to submit courtesy resignations to the Office of the Executive Secretary. The GCG says this is part of a broader review to assess key officials, realign priorities, and ensure state agencies remain, quote, dynamic, accountable, and responsive. This signals a push for performance-based appointments and could spark shakeups in critical state-owned firms, including those in power, water, infrastructure, and finance. For business leaders and investors, the restructuring raises questions around regulatory clarity, contract continuity, and the future of public-private partnerships ahead. Philippine insurers are being urged to step up with innovative products as weaker global growth and rising uncertainty put pressure on corporate risk strategies. That's according to Allianz, one of the world's leading insurance and financial services groups, in its latest global insurance report. The study warns that the second wave impacts of trade wars, including supply chain shifts and credit tightening, will require stronger prevention and protection measures from insurers. Allianz notes that slower economic growth, reduced trade, and higher credit risks are weighing on insurance markets worldwide. And while effects of trade wars may not be immediate, companies operating amid volatility are expected to seek more risk coverage. This creates growing demand for products like supply chain disruption cover, trade credit insurance, and geopolitical risk protection, especially for exporters, logistics firms, and cross-border operations. Philippine rice tariff collections climbed to 34.23 billion pesos in 2024, a marked increase from the nearly 30 billion pesos recorded last year. Data from the Bureau of Customs shows that tariff receipts from imported rice continue to rise, with funds earmarked for the Rice Competitiveness Enhancement Fund under the Rice Tariffication Law. That fund is designed to modernize the Philippine rice industry, including support for farm mechanization, seed development, and farmer training. Agriculture Assistant Secretary Arnel de Mesa, meanwhile, assures consumers that the country has stable rice supply and prices despite the approaching lean season, thanks to a strong harvest earlier this year. For business leaders in agri-food and retail, the growing tariff fund offers a chance to push for greater efficiency, but also raises questions on how effectively the resources are being deployed. The Asian Development Bank, or ADB, is committing to invest $24 billion in Brunei, Indonesia, Malaysia, and the Philippines over the next 3 years. The pledge comes at the 16th summit of the BIMP EAGA, the East ASEAN Growth Area Initiative focused on boosting development in lesser-known regions. The ADB says that the funds will deepen regional cooperation and integration, especially in strategic sectors like connectivity, private sector growth, cross-border energy projects, and food security. For the Philippines, this is a chance to tap into a broader economic corridor linking Mindanao and Palawan to key markets in Southeast Asia. Business leaders say the commitment could unlock trade investment and logistics opportunities in previously underdeveloped areas. In the U.S., tech billionaire Elon Musk is stepping down as a top advisor to U.S. President Donald Trump. The move comes after Musk expressed disappointment with Trump's so-called Big Beautiful Bill legislative agenda. In a post on his social media platform X, Musk thanked the president for the opportunity to help reduce wasteful spending. He also said that the mission of the Department of Government Efficiency will continue to strengthen as it becomes a way of life throughout the U.S. government. A White House official speaking on condition of anonymity has also confirmed his departure. Back here at home, an expert warns that the EDSA rehabilitation could trigger economic losses worth trillions of pesos if not managed properly. We have the details from Sujin Kim.
The government's enforcement of an odd-even vehicle scheme on EDSA in line with a 2-year rehabilitation project is raising some concern from economists and business groups who warn of billions in economic losses, disrupted logistics, and heightened inflation risks. According to Sir Percival Reyes, director of the Ateneo Center for Economic Research, the limitations on mobility along the country's main business artery could slow economic activity and trigger inflationary pressures.
So all told, the daily losses, if you add them all up, and they run in the billions, by the way, if you add them all up in 1 year, they actually can outweigh GDP growth. So that's how big it is. It can range trillions and even be greater than GDP growth. But beyond a certain threshold, congestion begins to become a drag on growth. Specifically, if your congestion gets to be worse than 35 to 37 hours of delay per commuter per year, okay, that will have an effect on your economy.
One of the country's largest business organizations, the Philippine Chamber of Commerce and Industry, shares that sentiment, particularly in the logistics sector, where companies are already feeling the strain.
But definitely it will have an impact on increasing the logistic cost of many operations. Many of the truck firms that I talk to, their productivity is almost cut to half, because on a day trip, they can only make one trip. So now we're delivering according to the advisory to do delivery at night, and that adds cost. Not only that the delivery, you pay more for the night's work, but also the warehousing and everything. You have to have people receiving those goods also. So that takes a big chunk on the cost of operations for many companies.
The delays in the transportation of goods and services, that will have a lot of cost also, no? Gasoline being burned in traffic, okay? The delays, all right? Not to mention the negative externalities, the pollution that is going to be, imposed upon the environment.
PCCI Chairman George Barcelon points out that night shift differentials alone could add 30% to operating costs, a burden likely to be passed on to consumers.
So this cost will be passed on.
In the retail and mall sectors, foot traffic is expected to drop significantly, potentially leading to losses for Metro Manila-based businesses.
I can see that some of the some of the service sectors, restaurants or whatnot, will be affected because when you think that traveling before will be, let's say, an hour, now becomes 2 hours. That will discourage you, to try to go towards that direction. If not, you have to route your way, and we really don't have many alternate routes to go from one side of the city to the other side of the city.
For economists, the long-term solution lies in decentralization, moving economic activity outside the capital region.
Ultimately, economic activities, investments will be channeled outside Metro Manila so that we can ease the congestion therein. Okay? And that, of course, will come with investments in infrastructure. That's really what our long-term planning, economic development planning should be about.
It's so improving the province.
Another option is to reinforce remote work policies to mitigate the impact of daily commute disruptions.
So I think much like what we did during the pandemic, we could probably consider having more flexible working hours, work from home schemes. And it has, one thing that came out well in the pandemic, we could do that, we could implement it, given, of course, our technology, what we knew then and what we implemented then.
Business groups are calling for clearer guidelines, transparent exemptions, and stronger coordination between transport agencies and the private sector, warning that without these, the cost of the odd-even scheme may far outweigh the gains. Sujin Kim, Bilyonaryo News Channel.
Ayala Corporation secures approval from the Securities and Exchange Commission to proceed with a massive 20 billion peso preferred share offering. The move is part of its broader strategy to strengthen capital and streamline debt. The SEC unbanked gives the green light for the reissuance of 5 million preferred B shares with an over-allotment option for another 5 million, bringing the potential total to 10 million shares. Ayala prices the shares at 2,000 pesos each. Proceeds from the offering will be used to pay down loans, fund capex, and support other corporate initiatives. The shares are set to list on the Philippine Stock Exchange on June 18, with trading to begin on the same day. This signals Ayala's confidence in tapping local capital markets despite global uncertainty and highlights the continued role of preferred shares in corporate funding strategies. Now we're taking a quick break. Please stay with us as we dive deep into the numbers and the narratives that matter most to your bottom line. Welcome back. Let's check on Asian markets this Thursday morning. Right now, despite the losses in Wall Street overnight, the Nikkei 225 is sharply higher, up by 1.6%. Hong Kong's Hang Seng Index in the green, but not by as much, up by 0.5%. Shanghai's Composite up by 0.5% as well. Singapore's Straits Times Index, however, is going the other way, but not by much, just down by 0.1%. Now, checking on our market here at home, the Philippine Stock Exchange yesterday climbed back above the 6,400 level as investors welcomed a temporary easing in global trade tensions. The main gauge closed higher by 0.6% to 64.26, lifted by broad-based gains following a global relief rally. U.S. President Donald Trump's decision to delay a 50% tariff on European Union products sparked stronger sentiment across equities. The main gauge is higher by 0.2% to 64.37. All shares index in the green as well, higher by 0.1% to 37.57. As for the sub-indices, the financials, industrial, and services counters are, helping the market, helping lift the market, whereas the holding firms, property and mining and oil counters are trimming the market's advances. So far, 90 million shares have been traded, valued at 690 million pesos. Market breadth is positive. We've got 60 advancers, 51 decliners, and 34 stocks are unchanged. Now, checking on the currency market, the peso opens weaker at 55.65 to the dollar, depreciating from its previous close of 55.48 yesterday. The Anti-Money Laundering Council, or AMLC, is pushing to amend the country's Anti-Money Laundering Act in a bid to keep the Philippines off the Financial Action Task Force's gray list. Proposed amendments include tighter oversight of virtual asset service providers and new powers to suspend suspicious transactions in real time. Officials say these changes are intended to align with global standards ahead of the next task force review in 2027. Now, despite recent improvements, experts warn that money laundering remains a systemic risk, threatening the country's reputation, investor confidence, and access to global financial markets. The AMLC is now conducting a national risk assessment to identify gaps and vulnerabilities in the system. Philippine business leaders and financial institutions are watching closely as the failure to meet global compliance could impact foreign investment, remittance flows, and banking relationships worldwide. An international think tank projects the Philippines will welcome 8.22 million foreign visitors in 2025, just 1% below the country's pre-pandemic record of 8.3 million in 2019. The forecast comes as Asia Pacific travel continues to rebound, with countries like Japan, South Korea, India, and Indonesia leading the region's recovery. While the Philippines is still playing catch-up, analysts say that the uptrend signals tourism resilience and renewed demand. The think tank's outlook is more bullish than most tourism analysts, many of whom predict a plateau around 6 million arrivals unless there is a significant return of mainland Chinese travelers. For the Philippine economy, where tourism accounts for roughly 12% of GDP pre-pandemic, the outcome could influence spending, jobs, and investment in transport, hospitality, and retail sectors. At a time when global travel demand is cooling, one Philippine carrier is defying the odds. Cebu Pacific is surging ahead, posting strong growth numbers, launching new domestic and international routes, and expanding its reach while others stay grounded. In an industry facing uncertainty, the low-cost airline is betting on scale and connectivity to stay profitable. More from our mobility correspondent, G. Baroga.
Cebu Pacific is flying high, even as the Philippines braces for flat growth in foreign tourist arrivals this year. The budget airline of the Bilyonaryo Group reports a 26% surge in passenger traffic and a 25% increase in seat capacity in the first quarter of 2025. This signals a strong demand and confidence in its expansion plans.
As we look through the remainder of this year, we expect for the full year our growth to be somewhere between 15 to 20% over where it was last year. So that's very impressive growth in a marketplace where others actually are struggling.
The upbeat forecast comes despite stagnant inbound tourism. The Philippines is projected to welcome around 6 million foreign tourists this year, the same figure as 2024, as growth in the first quarter remains flat. But Cebu Pacific is pushing forward with bold moves. The airline launched new hubs in Davao and Iloilo, scaled up flights in Cebu and Clark, and opened 24 new routes last year, including flights to Sapporo, Japan, and Chiang Mai, Thailand. It also quietly overtook a rival airline in international passenger volume, a feat executives attribute to smart network expansion rather than market domination.
Look, it's good that the expansion's paying off. It's good to see that we lead in terms of total international passengers and seats on both domestic, which we've traditionally done, and now on international as well.
In a strategic move to maximize aircraft utilization, Cebu Pacific signs a wet lease agreement with Saudi Arabia's Flya deal, allowing it to deploy planes, among others, during the third quarter off-peak season in the Philippines.
But the first step on that is to sign for 2 aircraft, 2 A320ceos that we will be wet leasing. This is our aircraft, our crew, our maintenance. Will be providing cover for Stephen in his operation in Saudi Arabia during our low season.
The airline also expresses support for the privatization of regional airports, viewing it as a vital step in expanding domestic connectivity. Despite the headwinds facing the aviation industry, Cebu Pacific is committed to growth and innovation, positioning itself as a key driver of travel and tourism in the region. For BNC Mobility, G. Baroga.
The Presidential Communications Office issues a warning to the public after a fake Facebook page posing as Radio Television Malacanang or RTVM is found promoting a fraudulent investment scheme. The imposter page copies RTVM's name and profile photo to trick users into sending money. But officials stress the agency does not solicit funds and is not involved in any investment programs. The public is being urged to follow only verified government accounts, look for the blue checkmark, and report fake content immediately. RTVM has formally disowned the fake page and apologized for any confusion it may have caused. The incident highlights growing concerns over online impersonation scams and the need for stronger digital literacy, especially when public trust and financial security are at stake. In the Central Visayas province of Negros Oriental, authorities are opening alternative ports to prevent a logistics crisis as cargo continues to be diverted from the San Juanico Bridge following new weight restrictions. The move comes after the bridge, a critical link between Samar and Leyte, was placed under a 3-ton load limit due to structural concerns. That's forced trucks to seek alternate shipping routes to move goods across the Visayas. In a press conference, Dumaguete Port Manager Ray Del Moro says several ports in Negros Oriental have been identified to ease the congestion. These include the Tandayag Port in Amlan, the port in Tambobo Bay in Shaton, and several private ports now being activated to handle increased cargo volume. The Tandayag Port is now hosting roll-on, roll-off or RoRo barges for both cargo and passengers, while the Shaton Port is fully operational and ready to process shipping line applications. For regional supply chains and businesses moving goods through the Visayas, this coordinated port strategy is seen as a crucial short-term fix to prevent shipping delays. Rising freight costs and losses estimated at 600 million pesos if the situation isn't addressed. We're taking a short break. Business 360 will be right back. Welcome back. Bangko Sentral Governor Eli Remolona takes the crown as the highest paid government official in 2024, according to the latest salary report from the Commission on Audit. Remolona took home nearly 48 million pesos last year, including bonuses, allowances, and other incentives. BSP officials dominated the list, securing most of the top 10 spots. Also on the roster, the Solicitor General, a Supreme Court Justice, and PAGCOR Chair Alejandro Tenco. The COA's annual report offers a glimpse into compensation levels at state-owned firms and regulatory bodies, a useful lens for business leaders monitoring governance, transparency, and incentive alignment. The full report is publicly accessible online. President Marcos says he is confident that the upcoming trial of Vice President Sara Duterte in the Senate will not lead to political chaos. But the president also makes it clear that he never wanted an impeachment in the first place.
I didn't want impeachment. Lahat ng kakampi ko sa Kongreso hindi nag-file ng impeachment complaint. Yung mga nag-file ng impeachment complaint, hindi mo masasabing kaya kong utusan o pagsabihan na ito yung gagawin mo. So, why do I have to keep explaining that I did not want impeachment?
The statement comes as speculation grows over the administration's involvement, particularly with Chel Diokno and Laila De Lima now joining the House prosecution panel. Both are associated with the Liberal Party. Iloilo Representative Lorenz Defensor, who's also on the panel, says that the president should stay out of the impeachment talks.
The president should not be involved in the impeachment. And I'm glad to hear that the President, as the head of the executive department, will not interfere with the impeachment process. As the President is the most powerful man in the country, he will exert undue influence on the senator judges, and we want the senator judges to act independently, free from any influence from the executive department.
As the trial approaches, stakeholders in both politics and business are closely watching for any impact on policy continuity, investor confidence, or administration cohesion. Vice President Sara Duterte arrives in the Netherlands ahead of her upcoming impeachment trial. She's set to meet her father, former President Rodrigo Duterte, in The Hague on May 30th. Filipino groups in Europe have reportedly organized a gathering outside the International Criminal Court on May 31st to mark the Vice President's birthday. Before flying to the Netherlands, Vice President Duterte visits Doha, Qatar, for a Thanksgiving event with the Filipino community. She is joined by her mother, Elizabeth Zimmerman, and Senator Amy Marcos. The Vice President is expected to return to the Philippines on June 4th, one day after the Senate formally convenes as an impeachment court to hear her case. The political rivalry at the heart of Negros Oriental's leadership crisis takes a new turn. Representative Janice Degamo, widow of assassinated Governor Roel Degamo, is calling for the immediate return of Arnolfo Teves Jr., the former congressman and primary suspect in her husband's murder. The two families had been locked in a deep political feud in the province, and the case has since evolved into a national test of governance, justice, and security.
I hope po after the arrest, he will really be brought back home and be made answerable to the crimes committed sa husband ko along with the others who died with him po. Sana po talagang totoo na yun na maiuwi po talaga siya in the country po para maharap niya yung charges against him.
Teves was rearrested this week in Timor-Leste after being tagged by authorities as an undocumented alien. The Timorese government says his presence represents a serious and unacceptable situation and has ordered his deportation. The case highlights critical issues of political accountability and rule of law, both vital to policy stability and international perception, as the government pursues its reform agenda. High-profile cases like this remain a barometer for institutional integrity. Despite the presence of Chinese Coast Guard vessels, the Atin Ito coalition completes its third civilian mission. Solidarity and peaceful assertion of Philippine rights in the West Philippine Sea. Akbayan Party List President Rafaela David calls the mission a victory for Filipinos, especially for those hoping for stability in the region. The group also delivered relief supplies to Filipino fishermen operating near Pag-asa. The Philippine Coast Guard confirms that two vessels, the BRP Melchora Aquino and BRP Malapascua, successfully escorted the Atin Ito convoy from El Nido to Pag-asa Island. The civilian ship is now en route back to Manila. For the broader community, the mission signals growing civil society involvement in maritime affairs and reaffirms the government's commitment to asserting sovereignty without escalation. We're taking a quick break. Business 360 will be right back. With this just in, Rafael Consing resigns as President and Chief Executive Officer of the Maharlika Investment Corporation. This comes after President Ferdinand Marcos Jr. orders GOCC leaders to submit their courtesy resignations. Consing says that the entire MIC Board of Directors are also submitting their courtesy resignations immediately upon receiving the relevant memorandum from the Governance Commission of the GOCC. U.S. Vice President J.D. Vance declares the Trump administration a champion of cryptocurrency, making big promises at the Bitcoin 2025 conference in Las Vegas. Vance told industry leaders that the White House will roll back what he called anti-crypto rules under President Biden, saying they stifled innovation and targeted digital assets unfairly. He also announced the immediate firing of SEC Chair Gary Gensler in a sweeping purge of regulations deemed hostile to crypto. Vance's message to the industry was direct. Under Trump, cryptocurrency has an ally in the White House. For Philippine investors and tech founders, the signal from Washington could influence global capital flows, regulatory trends, and risk appetites in the digital asset space.
We've got to clean up the wreckage that the last administration left us. And since day one, that is exactly what we've been trying to do. Our administration, we prioritize eliminating the rules, the red tape, and the lawfare that we saw aimed at crypto by our predecessors. We're ending the weaponization of federal regulations against this community. To put it simply, Operation Choke Point 2.0 is dead, and it's not coming back under the Trump administration.
Still in the U.S., new orders for key manufactured capital goods there fell sharply in April, marking the largest decline in 6 months and signaling growing uncertainty in the global trade environment. According to new data from the U.S. Census Bureau, orders for manufactured durable goods dropped 6.3% month on month, while overall transportation orders plummet by 17.1% in the same period. Economists say that the slowdown in corporate equipment spending reflects the impact of President Donald Trump's unpredictable tariff policies, which are complicating business planning, supply chains, and long-term investment decisions. In response to the heightened volatility, several major U.S. retailers have started talks with investment banks about going private, a strategic move to shield their financials from market pressure and regulatory headwinds. For Philippine exporters and investors, this data underscores the need to watch for trade-related shocks from the U.S., particularly in manufacturing, semiconductors, and supply chains with American ties. U.S. President Donald Trump calls for a 15% cap on foreign students at Harvard University in a move that could have wider implications for international education and talent mobility. Speaking from the Oval Office, Trump criticizes the university for admitting too many international students, saying they make up a disproportionate share of the student body and referring to some as troublemakers. He warns that Harvard has got to behave itself, accusing the university of treating the United States with great disrespect. Trump also says he wants the Ivy League school to submit a list of current foreign students to his administration.
Well, we're going to see. Look, Harvard has been a disaster. They've taken $5 billion plus. $5 billion. Nobody knew that they were making this kind. If we didn't do this, we would have never found this out, Pam. They're taking $5 billion. And I'd rather see that money go to trade schools. And by the way, they're totally anti-Semitic at Harvard, as you know, and some other colleges, too, in all fairness to them. And it's been exposed, very exposed. And I think they're dealing very badly. Every time they fight, they lose another $250 million.
The comments come amid broader tensions over immigration, education, and national security, and could affect students from countries including the Philippines who view U.S. universities as a critical gateway to global opportunity. Now, Palestinian ambassador to the United Nations, Riyad Mansour, breaks down in tears as he addresses the UN Security Council. Visibly overcome with emotion, Mansour pleads for an end to the bloodshed, describing the suffering of children in Gaza as unbearable. The address comes as Israel continues its military campaign in retaliation for the Hamas-led attack on October 7th, 2023, which killed over 1,000 people and took 251 hostages into Gaza. In the months since, Gaza has been disseminated. More than 54,000 Palestinians are believed to have died, with much of the coastal strip reduced to rubble.
How could anyone tolerate this sorrow? Excuse me, Mr. President. I have grandchildren. I know what they mean to their families. And to see the situation of the Palestinians without us having hearts to do something is beyond the ability of any normal human being to tolerate.
The United Nations has called the situation a humanitarian catastrophe as diplomatic efforts to end the war remain at a standstill. And that's it for Business 360. I'm Maiki Oreta. Thank you for joining us, and keep it here on BNC, the Bilyonaryo News Channel.